fundsupermart.com.
The Asian market did not perform too well in 2014. Japan even slipped into recession in the third quarter. What is your view on Asia's fundamentals? Where do you find investment opportunities within Asia?
Actually, Asia did quite well last year, quite on the contrary. For example, China market actually increased by 40%, followed by India, which was actually up by about 30%. Within the ASEAN region, Philippines, even Indonesia actually did about 20%. Even Thailand actually rose 15% despite the political disruption. So Asia as a whole actually did very well in 2014. On the economic front, I think Asia also showed a very strong growth last year. China registered a growth about 7.4% likely for the full year last year, and Philippines and India also performed quite well within the 5 to 6% region. So overall, Asia as a whole did perform fairly well last year. Going into 2015, I think we are actually quite positive on Asian equities. Okay, although QE has ended, okay, but the other central banks will continue with their accommodative monetary policy. So I think that actually provides a backdrop for a better equities in Asia as a whole. Moreover, a lot of the Asian countries are going to benefit from the lower oil price because most of them are actually oil importing countries like China, Taiwan, Korea. Even within ASEAN, you have Thailand, Philippines, and so forth. So all these countries are actually going to benefit from the lower oil price. Fundamentally, yes, China will probably going to show a slower growth, okay, probably to the region about less than 7%. But the good thing is that the government remains very accommodative on the monetary front. So we like China, okay. Apart from China, we like Taiwan, partly because of the US dollar strength. Taiwan has got one of the highest leverage into the US dollar exports revenue. So the strong US dollar is actually good for Taiwan. Okay, within ASEAN itself, we are quite selective. Okay, we like Indonesia and Thailand, but it's more on the bottom-up stock picking.
What is your outlook for Malaysia in 2015?
We are generally quite cautious for Malaysia. Okay, I think near-term market, the volatility is probably going to continue for a while because investor sentiment is actually hurt by the sudden drop in oil price and the ringgit weakness. Okay, I think oil price will most likely stay depressed for a longer while before it starts to rebound in the second quarter or beyond when production is being cut back. Okay. Now that coupled with the weak ringgit together with the upcoming implementation of GST, I think all this is probably going to put a cap to your performance in the first quarter. Okay. Now beyond that, when oil price and your ringgit stabilize, I think investors' interest will actually return to your fundamentals and also refocus on the better growth outlook in the second half. Okay, that's when we think that a more sustainable rebound will happen in the second half. Okay, and sector-wise, we actually like sectors like your exporters. Okay, your utilities. Okay, they are beneficiary of the lower oil price and commodity prices, as well as construction. Okay, these are the sectors that we like.
With the strengthening of US dollar and the US economy, how do you think the Asian market, including Malaysia, will be affected in 2015?
A strong US economy is generally good for everybody because strong US growth lift up the global growth together with it. At the very least, okay, the Asian countries that export their goods to US will benefit from a stronger US economy. Simply because of the stronger external demand. A strong USD, on the other hand, has got a slightly more complicated implications on Asian economies. A strong USD itself means that your local currency, your regional currency, on a relative term will stay weak. For example, a weaker ringgit, for example. A weaker ringgit will actually make Malaysian products more competitive in the international arena. But unfortunately, all your Asian currencies are also, weaker as compared to US dollar. So the impact is actually less significant. Okay. On the other hand, a strong USD will also induce some imported inflation pressure, as well as further capital outflow out of the country, because the attractiveness of holding the Malaysian asset become less. Okay, so that will actually may induce possible further capital outflow from out of the country. Okay, now there are also concerns on the debt servicing ability on US dollar borrowing, but luckily for Malaysia, the country's foreign debt, okay, as a percentage of total debt is less than 3%, so the impact is actually not significant on that front.
What are the impacts on Malaysia's budget deficit as Petronas cuts down on its capital expenditure in 2015? Is there any particular concern that you have on this issue? Actually,
Petronas cutting down on its capex doesn't have a direct impact on fiscal policy. It has an impact on GDP, i.e. it may reduce your GDP. It will only impact your fiscal position if Petronas cut back on its revenue or contribution to the government. Okay. Now, for example, in 2013, Petronas actually contributed 65 billion of revenue to the government. Okay, that's 30% of the total government revenue. Okay, out of this 65 billion, 28 billion came from dividend, 29 lah. Around another 28 billion came from your taxes, corporate taxes, income tax and all that, and the remaining 8 billion came from royalty and export duties. Okay, now assuming if oil price was to stay at $60 per barrel, okay, from the $100 base case that when the budget was first calculated, then there will be a reduction of 26 billion in revenue to the government. Okay, that's after accounting for the around the 13 billion savings from the cutback in subsidy. Okay, this 26 billion reduction actually is equivalent to 1.1% of GDP, meaning if the government doesn't cut back on its other expenditure, the budgeted fiscal deficit this year, which is about 3%, will go up to 4.1%. Okay, other things being unchanged. But of course, there are other means to actually, for the government to plug the fiscal gap. They may be able to cut back on other expenditure, but our PM is probably going to come up with a revision in the budget next week. Let's see how it goes.
What are some of the opportunities that lie ahead in Malaysia? Are there more value to be found in the large or small cap? Will 2015 be a year for growth or value stocks?
Okay, I think in the near term, one can focus on the two themes at least. First of all is the falling oil price. We should actually look at some of the beneficiaries of the falling oil prices and commodity prices, and this will be sectors like your airline, okay, transport, and utilities. Okay, and we can also focus on the beneficiary of ringgit weakness, and this will typically be your sectors like exporters, like for example your technology sector, okay, rubber glove sector, or even to a certain extent the plantation sector. Okay. Now, but longer term, when oil price and ringgit actually stabilize, we should refocus on fundamentals. As to your question of whether there will be more value to be found in the small and the mid cap, or the big cap, I personally think that there will be still more value to be found in the small and the mid-cap space, simply because, after the recent drop in the last 2 months, a lot of value had actually emerged in the small and the mid-cap space. And a lot of these stocks actually offer very good earnings potential, and some of them even give you very good dividend yield, okay? Now, as to growth versus defensive, I think one can actually find value on both, but my preference actually tends to tilt towards the growth-oriented stocks, because my basis for this year is that the global growth is not derailed, and if that is the case, your growth-oriented stocks should be able to give you the outperformance.